Our conditions majority bearish at 14. Saw some acceleration on Friday to the downside here on S&P 500. 1 hour time frame also sitting at majority bearish. We've got a demand zone coming in here around this 5,500 level. You can see that green demand block coming in, and this 38250 retracement level really rejected the S&P 500 and pushed it to the downside. We're seeing just some acceleration here of this trend, and this is a slow moving process. It's a slow moving ship to turn, and it is certainly turning. So not a whole lot so far as of right now. Market conditions are not seeing a lot to be excited about, and I'd be watching for continued move to this downside on S&P 500. We saw a sharp move in the breadth of the market. Stocks above their 50-day moving average dropping to 33. That's been hovering around that level. We talked on Friday about that range being all the way down to, let me just squeeze that a little bit, down to that 10 range and that 80 range where we are at the extremes, and we're just not there quite yet. So we could certainly see some acceleration. We're relatively tight on this compressed move here, and this is where we could be. So we can certainly see some acceleration to the downside on breadth as well. And again, just not a real good time to be looking to be aggressively to the long side. We're seeing fear coming back into the market right here on VIX, pushing back to majority bullish at 14 and 0, and pushing that level back up into that 24 range. It didn't spend much time back down here, but the upper range was that 18 area, and typically in nice trending bull markets where there's not a whole lot of fear coming back to the market, we're under that 14 level down in that. We never did get there. So a higher low on VIX, as well as volatility, has been elevated and now continuing to be elevated right here. SHY, let's take a look at bonds. The short end of the yield curve, we're seeing that price pattern continue to be bullish right here as interest rates are dropping. And again, the part of the issue that the market is trying to digest is this scenario where we're now starting to see economic contraction. We're starting to see some of those things showing slowing economy, but we're also seeing inflation numbers which are still elevated. So interest rates may have to remain high in a weakening economy. It's some real trouble for the Fed to consider right here, because interest rates are really their main gauge. It's their main lever to be able to pull and deal with both of those two things. And if they're doing opposite things, getting inflation still going higher, but the economy is weakening, then rates may have to be stuck right there here at these elevated levels, and that stagflation creates some issues. Markets are certainly starting to get a whiff of that risk. TLT bond yield curve seeing that move, or the long end of the curve, TLT continuing to move to the downside. Let's take a look at those rates. We're seeing the 2-year actually have some pretty significant selling here in the last few days. I'm actually just going to zoom in here as well and grab that downtrend on the 2-year rates and see similar price pattern to the S&P 500 at the rejection level, that 382 resistance area. The 10-year also showing some weakness, majority bearish, and again, this is on the rates themselves. So we're seeing 4.20 and a rejection at that 438 rate range for more downside. And again, so markets moving lower, rates moving lower in anticipation of both of those things needing to happen, inflation and a weak economy. And it's going to be an interesting week for sure. Dow Jones Industrial Average also, it had tried to work its way back up into this demand zone early on. It's now really shifted back into a supply as we pushed back down through that majority bearish. All of these indices, just bearishness across the board, and be watching for these are essentially additional locations to be watching for adjustments of risk in your portfolios. We're still at the upper end of the range. If we jump over and look back at S&P 500 and look where we're at on that weekly time frame, you can see that we're still majority bullish at 9 and 5, but we're really starting to get beat up right here in the upper end of this range. So you look at this chart pattern on this weekly time frame, it doesn't look all of that significant, but we're at the upper end of this trend range, and we could get a little bit of a flavor similar to this price pattern right around here back in 2022 when we were pretty expanded in the trend currently upper end of the range, and So there is a probability that we're entering into a consolidation or compression phase on the trend. And in this case, that could be up, that could be down, that could be straight down, that could be volatility along in a sideways pattern. We'll see how that unfolds. Bearishness nonetheless. Triple Qs, let's go back to that. And we go back to the daily time frame. And let's jump over to the Russell 2000. We're seeing that continue to have weakness as well. That downtrend has been intact for quite some time. That actually didn't even make it back into that corrective zone. It's still finding rejection at the 236. So in that momentum zone still works the opposite direction as well. Just like it does on the upside, it can work to the downside when we're in a downtrend, watching for a move back into this move and then back down. So Russell 2000 is still in a bearish momentum trend. USO, let's see if we're getting any additional strength here in oil. Had a big pop, a little bit of a pause right here. Majority bullish still at 8 and 6. Compressed trend happening. 1 hour time frame. You can see that trend has now shifted, but now we're getting a little bit of a pullback consolidation. Some work there for oil to do, but it is certainly moving. Gold also continuing that move at the upper end of the range at 14. And silver also following suit right there as well. Those are areas that they've already had these really big, nice runs. They could certainly move higher, but expanded trends on both gold and silver currently. Let's take a look at a couple of stocks to consider. There still are stocks moving higher. Again, it's just position size is going to be the issue. How big of a position, maybe a tighter stop loss. It's about risk management in these downtrends or sitting on the sidelines. Welltower in the senior living real estate space moving higher as well. You're seeing a ton of utilities really popping, like Southern as well, moving back into momentum. And again, several utilities that are pulling into this price pattern as utilities are a little bit more consistent in economic contractions. Keep an eye on that. If you need access to those screen criteria, you can get those in our Discord channel in the description of this video. And that'll do it for today's update. Everyone have a fantastic day today.